Okay, hope everybody have a productive day. Hope everybody's having a nice strong week. When it comes to my predictions of the stock market, once again, I've been proven right when it comes to crude oil. Crude oil keeps hitting around the $94, $95 barrel. When it comes from oil, we have to at least understand that if tensions like this happens, this is something where we can be able to profit off of a week-to-week basis based off of the scenarios of future markets, aspects of call options, and setting out a put as well to be able to protect yourself 5 to 10% downside. Say if a situation of a sell-off due to the fact that everything is profiting, but palladium market has literally skyrocketed to the point where palladium is outperforming gold, mind you. So when it comes from economic standpoint, uh, the supply of oil, the solution really is just to dump a lot of supply and the prices will go down. That's economics. So for all the people that's coming in, please like the video. This is an open panel if you have any questions or if you have any statements or have any type of take when it comes to the economies in your market. So we're going to look at the Dow Jones. We're going to talk about real estate, aspects of what's going on in certain people's market. Look at retail, look at residential, go over some credit unions, pretty much the usual. But the scenario of everything that's going on when it comes to the oil prices, ExxonMobil, Chevron, they're going to be the biggest players. Crude oil, if it goes to 110, 115, that'll reach to the point of the Gulf War. Bush had an economic incentive of making sure that they go to war in that aspect of Kuwait because he owned a Kuwait business that's literally was at the brink of bankruptcy, failing. But that scenario helped profit him. Hence that if history follows again, all these oil companies are going to make very, very big money. And the people that was with me that understood that when I meant getting the dip of those oil companies in 2020 and 2021, I think you guys can be able to see another 20, 30% based off of the range of this. Because it seems like when it comes to the legislation, really it's price freezes. That's the only thing that's needed. But for anybody that wants to come up on the panel or wants to call in, the link is in the chat. I'm going to share my screen and we're going to look at the Dow Jones because the Dow Jones got its ass whooped. And this is bad because people's pensions, 401ks is in here. A lot of people's retirement plan is connected. So when I told y'all to have all your Bear 3X ETFs, I still made at least a scenario for you guys to be able to profit on the downturn. Because all those people that be on Squawk Box, Jim Cramer, that was saying that, it's not a bear market. It's not a bear market. Just hang on. Just hang on and buy the dips instead of getting your put options and shorting a lot of the positions. So as we can see, the market was at 36,000 points. And now it's the highest situation because of a lot of stimulus was floating. Now, since stimulus isn't floating and the child tax income credit is pretty much dying and waning off, 464 point drop, and all the situation of you know who, the Ukraine. So I don't believe that there's going to be any type of world war. It's going to be a scenario of proxy wars. Russia didn't try this 4 years ago, which everybody's looking at it like, why did they choose something now? But, they have dividend stocks, which I told you guys which dividend stocks to be able to go big on. STAG, so that's STAG. It's a monthly dividend. A real estate REIT, as I believe that the real estate market will still continue to go up based off of people's microeconomy situations. The market from big cities is going to continue to rise. Now, small surrounding cities that's nearby the city, they should expect certain type of rezoning to be able to build the population up in that area. Because mind you, there's going to be a lot of rezoning. So I mean, Section 8, affordable housing is going to get rezoned, and they're going to push more people to the outskirts. Call it as you may, but scenarios of zoning is literally happening and going on in a lot of people's neighborhoods. So this is a monthly dividend, and this took a big hit, but I go for the dividend yield. So the dividend yield right there, 3.8%. Monthly dividend is still having a good, successful payout. Okay. So this is the 1-year trend. So when I told you guys about this in 2021, even with you guys buying $100, $200 every month, you guys still managed to get steady gains. Now, for the people that like to short, somebody had 2 put options within a 3-week span. Hold on, let me get the decline percentage correct. So for the people that made their money off of put options, I would believe they would made around 20-30% off of just betting against and just having puts and shorting that stock. But people that play both sides of the stock, they'll have a holding of 500 shares, then do covered calls to make money on it, where you can be able to get the dividend every month, plus make 2 to 3% if the situation is right when it comes to the trend. But buying and holding this stock, at least 18% would have been in your bank account. 18%, mind you. A lot of people can't even register at 7. A lot of money managers can't even get your 5. But for all that's coming in, feel free to be able to join. Feel free to talk, whatever you need to talk. Okay. Yeah, market is looking horrible lately, but that's a good thing because you can short it. Bear 3X. The S Dow. You have inverse ETFs. People are buying a lot of bonds. So the bond market usually does good when the stock market gets hit like this. Commodities are going up, like I keep telling y'all. So I'm going to share my screen. Give me one moment. There we go. Okay. So even with the market can go down to 20,000 points. As long as you have these leverage ETFs, you're going to make a lot of money off the downturn. Because you're stabilizing your money. So that's SPXL and SPXS. So that's the bear. SP500 is the SPSX. I want to look at New Jersey properties and look at the Philly market after we're done with stocks. Okay. Okay, so really the market can tank. The market can go flattering filter to zero. As long as you have the ability to understand that you have bear ETFs on your side, you can make more money. See, this is a healthy gain. While everybody is getting beat up, while Apple losing shares, this has gone up. Mind you, consolidation and crashed it a little bit, but you betting against the market, this is how you bet against it. Have everything in bears on all of the indexes. The SP500, short this. If you think that the scenario of the administration literally not doing a good enough job in keeping at least their hands off of regulations, and keep shorting it. Like the past 5 days, 15%. Past month, 10. 6 months, you still registered 8. And plus, this would have been good for call options. For all the people that look at day trading, they would have been able to make some money. Do a multi-day call options, setting your puts where you have your puts at least 5-6 months in distance so you can be able to have enough time to be right. But other than that, since January, well, since December, really, 31%. From a month to month, 34%. On a month to month basis, 40, close to 40%. While Kathy Wood, her ARK Invest got crushed. While crypto getting whooped. While all of these situations, you still could have been able to register some good gains based off of call options, putting, and really a lot of option traders, they just pick 3 or 4 stocks and just focus on those all the time. Because they understand the rhythm, they understand the volatility, they understand the flow of how that stock is supposed to go. But past 5 days, when it comes to the 3X bear, the market can keep getting whooped. As long as you have this, you have enough leverage. You have the ability to be able to at least have it where if it's going to be a 4 or 5 month type of rough spot, that's how you can make money. Same way when it comes to the Chinese market. Same way when it comes to the Chinese market. The Chinese market got its ass whooped today. Hence, you can make some money on the percentage of their market crashing today. Hold on, let me see the aluminum. Even my aluminum stock was up a little bit today. But this has been literally like a multi-month winner for me. And people should invest in basic materials, because if this thing goes up $130, don't act like I didn't tell you. Because Jim Cramer is not going to tell you this. Jim Cramer is just going to tell you, well, just buy the dip on all the retail stocks and just buy Apple and all of the expensive plays that are already at $200, $300. Mind you, when I told you guys about this, it was in the $40 range. As you can see, the past 6 months, 80% gain. For all the people that say, well, real deal, I don't think this is going to go up another 30, 40%. Well, I say, okay, I dare you to put 3 puts on this stock. I dare you to put a put on the stock that if this stock goes to 55 or 65, or mind you, 72, that person can be able to make a lot of money off of just shorting the stock. But I think it's going to go up based of all of the basic materials. And plus, with basic materials, this is recession proof. Because when the dot-com bubble had the problem, when everybody was investing in all the stocks that didn't have no revenues, just based off of sheer speculation, basic material stocks like aluminum, copper, cobalt made money. This is beating inflation. So let me do another one. Told you guys about Euless last year. Oh, messed up. Okay, there we go. Okay. I told you guys about Euless. For all my crypto maximalists, this is crypto, cybersecurity, and NFTs. So they are the acquisition company that buys these companies up, and you can be able to profit and make some money off the scenarios of them doing the acquisitions. So I bought the dip at 30 cents. And as you can see, when I told you guys about this 2 years ago, told you guys that it was a long hold. You buy the dip. So people that bought it at triple zeros, they're literally winning right now. And people that bought the dip even in August. So for all the people that was kept on listening, and you guys can look at the videos when I told you about the stocks to invest in on the third stimulus, my older last video from last year, when I told you guys deliberately on where to go, this was in the list. ULIS was in the list. NFTs, crypto blockchain for all the maximalists that wants crypto to literally become the new monetary currency. This situation also invests their money in cybersecurity. So when it comes to that, it's based on government contracts. Mind you, all these stocks that are pennies are all government contracts, all scenarios of mergers. You know, that's an opportunity for you guys to always keep paying attention, because when inflation whoops that ass on everybody and literally puts a foot on everybody's neck, you invested in the stock market, you invested in certain dips on cryptos, you can't help but to go at least to go right more than the average consumer. Mind you, a lot of people are not even invested. Scenarios when it comes to real estate, look for seller financing. You know, I gave you guys the tools with PopStream. We literally analyzed every single market that the hedge funds and people that are crying about either the market has gone up considerably high or there's aspects of property taxes getting risen just off the ground up. So when it comes from everything that's involved with markets now, I think the real estate market in big cities is going to continue to go up. And I think people should focus on their aspect of making money on shorting the market, because literally this administration that's in the White House literally doesn't care about inflation. They literally told you, you know, asking that, you stupid son of a bitch, just for asking President Joe Biden that. And I quote, because he said that. So all the people that sees that if there's going to be a lot of debt in your area, you study how much of the liens that are in this property, the taxes in this property, who's involved in the property. And also when people say that, with LLCs, it's tough getting a phone number when it comes to skip tracing, not with LexisNexis. You're using the same tools that the police are using to find out who's the owner to be able to do what they need to do. So you offer this person 1.3. You have a situation where you set up $600,000 in exchange for the note. So you got the aspects of the deed of trust, your note investing subject to, same thing, just a bigger asset. You can get a hard money lender with that note, and you can be able to do an aspect of paying that owner off. You can have a grace period on certain things. You just want to figure out how much is the owner is in debt for, how much the owner needs up front. Because these things have been on the market for literally 2 years, a year. So all these is all seller financing, owner finance, and retail is actually easier to get involved than apartment buildings, because you got to deal with a lot of agents that want to play gatekeeper. So when it comes to what Mark does, he gives you the proof of funds, he gives you the pre-approval on the loan. Only thing you need to do is just send these owners the letter of intent. The letter of intent will show that how much money that they're going to get up front, what's the terms, 4 years at a 6% interest. Your down payment will be the down payment that you get from your lender, mind you, because that you got that note. So note investing, that's how people can be able to get access to properties with other people's money to finance the down payment, get a construction loan to be able to build these assets out or reposition or change it up. A bombed out building, you need to make that into a loft. You need to be able to charge those people $1,200, $1,500 a month. If you're in a big city, $2,100 a month by turning an old industrial building into a loft. There's no way of stopping gentrification. There's only you need to get involved in it. Do you have a construction team? Do you have aspects of lenders? Cash Now Homes LLC. I give that lender to you. Uphill Capital. I give you another hard money lender. And if you're just on the basis of, well, real deal, I want to keep it all black. Carver Financial, very lender friendly. So as we can see, all these properties in New Jersey are all owner financed, from retail to apartment buildings to specialties. Cutting the price in half and starting your way up will do you the biggest solid. So a 2.2 billion like this, for all the people that do have the money where money isn't a thing, they would chop the price to 1.1 and don't go no higher than 1.4 and give the owner of this property 500,000 of your lender's money based off of you getting the deed of trust, getting a note, giving something up front, then at closing they can get their money. And that's subordinate, mind you. That would be the term of how to get access to the properties: with note, investing, deed of trust. But a portfolio of 2 properties up here. For all the people that's in New Jersey, give me some cues when it comes to New Jersey. What's the situation when it comes to Hackettstown, New Jersey? I heard of Tom's River. I heard of Hoboken. But Hackettstown. Okay, so 2 retail properties. So what's the income? Oh, the net operating income, $371,000. And with an SBA lender, you can actually get the business 10% down, and the SBA will fund the rest. Key Bank is a SBA lender and also a no-doc business loan lender as well. So I keep reminding you guys, so when that time comes, you could be able to say, okay, 6% cap rate. You still need the schedule, need their K-1 statements, tax returns if needed, to be able to figure out, is these real numbers or are they janking you? Because 5.3, nah. Mark, the loan officer, he's going to tell you to get this property chopped down in half. Try to get it at 3.7, 4.2, but not at 5.3. Not at 5.3. So the price per square foot, 361 per square. So yes, you would use your calculator and you would chop that down to around 280, 270 per square foot on the total size of this building. So that's how you would get your chop down price, by getting this at 270, 280. Then you times that by 14,000 square feet. So let me get my calculator. So your SBA lender can literally fund 90%. You bring up 10%. You build up your LLCs. We got business credit on each LLC. You can be able to raise enough money to get the down pay. So 75 times 14,000 square feet. So this will be your start off offer price. Then you work your way up no more than 4.3. No more than 4.3. But this would be your starter price based off of the square footage being chopped down from 362 to 275. And that will boost up your cap rate, mind you, because of the situation of your cap rate is based off of your net operating income compared to the value price of those assets. But see if there's any leases of any sort. Okay, so this is the aerial map. Wonder how much did they want for this gas station at this auction. 100% lease. For all the people that's coming in, please like the video. And also, this is an open panel. If you want to call in, click on the link. Click on the StreamYard link. Be able to call in. Bergen County. Okay. Property 6 sits on 6,500 square foot corner lot. Okay. Okay, so this area gets a lot of traffic from this description. I'm trying to figure out what is the franchise agreement, because this is a franchise and all franchise agreements are not built equally. So franchise attorneys having a sit down with a franchise attorney that specializes in oil and gas. And also this store right here, mind you, you make most of your money inside of your commerce off of somebody getting gas and buying some food with it. But people should also focus on what is that agreement, because if it's not favorable where you're mostly giving them money, like how Subway has the franchise agreement where they want a percentage, no matter if that's gross. It's gross revenue that they want. They still want their cut. And mind you, you still have operating costs. You still have employees to pay, you know. But for all my New Jersey people, man, come in the panel, man. For anybody that has a question for me, come up on the panel. We're going to still look at some more real estate. So let me look at... Okay. I'm trying to figure out what is... Damn, how do you... Bayonne. I'm trying to figure out what the hell was that city, but Bayonne, New Jersey. There you go. I actually like how the visuals of the Bayonne properties look. Bayonne properties look very, very good. So I'm gonna share my screen. And for all the people that's coming in, please like the video. Please feel free to like, share, and subscribe. And if anybody needs access to me when it comes to credit repair or credit funding, to be able to get involved in these real estate properties, creditbuilder475@gmail.com, creditbuilder475@gmail.com. Okay. I'm trying to find Redfin. There we go. If you see any property that's in the MLS that's been in the market more than 120 to 150 days, a lot of the times you giving out a discounted price wouldn't be as offensive, because, you know, that holding cost, because a lot of these people remodeled, renovated these areas. The properties look good inside. Okay, so Bayonne, 725, 650. Like, you never buy these at spot price. Never. Like, your starter negotiate. If you can be able to skip trace this property and get access to the owner, and you can undercut the agent, definitely try to have a start off price at 475, no higher than 515. Hit them with a 10-day cash offer. Set up a structure with your lender where you have everything all sorted. Like, my lender is very friendly, where as long as he knows that the seller is operated and cooperative, seller financing, the down payment on that can be worked out up front, where we negotiate this bad boy at 550. Let me get my calculator so I can calculate 550 divided by 20%. Say if you had 70,000, 60 to 70,000, you can get access to this property, 6-bedroom. How much is the rent in New Jersey for all my people in the East Coast per door? If I could just charge roughly 800 times 6 per door, times that by 12, plus a 4-year term. That's what you do, a 3-4 year term when it comes to these properties. 230 plus you could get a construction loan with Cash Now Homes LLC. So you get access to the property off of a note. And if you want to build something up, say if they got enough sizable backyard, people are renting out sheds, which renting out a shed in the East Coast, I don't see how you can do it. Now, if you're in South Carolina, I get it. But, people also told me in the East Coast markets that it's so expensive to tear down, which, yeah, it makes sense because, if you buy something at say, if retail buyer bought it at this point, tore it down to try to resell it for what, 1.4, 1.5, that's a very expensive and lofty price. So it's a spacious 2-family bed maintained throughout the first floor unit. I want to see the neighborhood, so I'm gonna copy and paste this, and I'm going to use Google Earth because I want to use Google Earth to see what's the neighborhood looking like. Okay. For all the people that's coming in, please like the video. Please like, share, and subscribe. Feel free to come in. Feel free to come in on the panel. If you have any questions, the call-in button is the StreamYard link. For all the people that that's not aware of StreamYard, click the StreamYard link and you can come up on the panel and you can ask me any questions on the spot. Okay, so this neighborhood goes for 650, 700,000. So if somebody had $70,000 liquid, if this property been on the market for a couple months, then that's how a lot of people finesse a good situation when it comes to seller financing, subject to, you give them something liquid up front, but you're mainly looking on that aspect to get access to the property, get a construction loan, you do some rehab and remodeling if you can, to be able to at least expand, where if you can make it to a 6 to an 8, mind you can be able to do what you need to do. But if you can charge $800 per door times 6, that's still a good estimate of money and a good cash on cash return. So all these properties right here are 710, 650 range. Deal Machine, for all the people that say, well, can we do driving for dollars virtually? A good app to do that is dealmachine.com, where you can be able to skip trace, to find who's the owner of this, see if there's any liens on the property. If there's any liens, loans, the name is signed on it. So literally it'll skip trace the name on that. And you can figure out who is who, present a cash offer. If you don't buy it, you can assign it to a cash buyer. Hence the purpose of wholesale real estate. But when it comes to this area, figuring out who owns this, how much is the rehab, quote a couple contractors to see how much is the rehab that goes for this area. The older the building, the more problems it's going to be when it comes to lighting, piping, all that other type of stuff that actually makes it to a $150,000 rehab. Because that's expensive. Because most rehabs that are in Texas usually ranges around 80,000. Something that is in new repair, it would be 120. But just off of repairing an old building and try to get it somewhat up to date, that could be like 6 figures and beyond. So that's why people overvalue their construction loan so they can profit at closing. So if the job costs 200,000, they'll ask their construction lender for 250 and be able to profit 50,000 at closing every time when they get access to a loan. I'm kind of considering moving down south someday. It's much cheaper down there. Well, if you have the ability to be able to cash out, then yeah, you could take New Jersey money from the neighborhood that, hold on. Hey, if you want to come up on the panel, come up on the panel. So if you if you lived in this neighborhood, 610,000 cashing out on 600, because this neighborhood goes for 650 to 750. This whole entire neighborhood in New Jersey goes for 650, 710. You could take that money and you could go to Texas, Houston, Austin, and you can find something that is something more spacious where you got some land and you're not in the metro city area for 350,000, because all these homes that are rolled up like this, bet you 650, 650, 650, 650. 4 of these make $3 million. In Texas, you can get about 14 houses. 14 houses, mind you. With 14 houses, say if you can charge 750 for a three-bedroom house times 12 properties, that's $27,000 a month, mind you. Times that by 12, that is all of the rents that you can get for 12 properties. Say if somebody sold 4 of these properties and say, fuck it, I'm going from New Jersey to Texas, they can get 12 to 13 houses. And that be their net operating income. That'll be their net operating income off of charging $750, $800 per door. But, the New Jersey market is crazy because of New Yorkers moving down there and making the prices go and fluctuate it up. But all these properties, all are $500,000 or more. Like, can I find a vacant lot? Can we find a vacant lot? Because if you find a vacant lot in this neighborhood, you can be able to see if you can be able to work out a deal with the owner. You find out the property records, county tax assessor website. If you don't know what PropStream is, county tax assessor website, and find out who owns any vacant lots that has some type of liens. You go to PropStream, you go to Prospect Now, Property Shark, and you got to figure out who owns who, at what price. Because cash buyers, they'll buy a good deal if it's a good deal where you could get one of these properties for $400,000, and you can show that this market neighborhood goes for $715. Yeah, you could be able to find somebody that could be able to have it where you give them your assignment fee, you can work the details out. Because we're doing house comparison from LA to Chicago, and somebody that is literally living in Compton or Long Beach, they can take their $800,000 and buy something nice in Chicago if they want to be able to move state to state like that. But when it comes from basis of everything that's involving of the real estate markets, I don't believe nothing is crashing. Now, there can be one thing that can lead to a crash, mind you. Say any small investors having any type of defaults. If they have a default, then we got a problem now. Then we got something where pre-foreclosure is going to be oversupplying the market. But that's an opportunity for you to try to get it at the lowest price because you know this person is going through things. Look at notice of default, notice of trustee sale, list pendants, to be able to get access to those people that are struggling so you can find out the right information, so you can sparse out all the information you need. Now, Chicago, well, we're talking about upscale Chicago. We're talking about literally what South Barrington, where, the richer upscale people, the hedge fund people, the $100 million condo buyers, the people that literally are in Wall Street, not Wall Street, but the Chicago futures market. They literally live in South Barrington. I keep saying West Bloomingfield. That's the Detroit upper scale area. But for anybody that wants to come up, click on the link, click on the call-in link. Anybody that has any specific questions, because I can go on and on. Because at the end of the day, you can be able to leverage the fact that you know the area more than a lot of these investors. And the only thing what you do is you find all the vacant lots, you write down the address that's nearby, you use PropStream to get access to the parcel number, you skip trace using either batch leads, LexisNexis, get access to the owner. If you're not a person that like to do cold calls, have a person where they can be able to do certain type of negotiations, or you can get the negotiator on Upwork or Fiverr. You got to have at least someone that understands the main premise of what is wholesaling, meaning that you get a contract for $60,000 and you assign it to a buyer for $85,000, but the neighborhood is worth $250, $270. If you can get that basis underlying concept, then everything else can be easier. Hence, that you can be able to make money in between the margins. And you do a blind HUD-1 statement with your title company so they don't see how much your fee is. A lot of deals fall apart because they see, oh, you're making $25,000 on a deal? Well, I don't want to do business. I renege. And that's where the blind HUD-1 statement or double closing comes in, where if you find a property that's $65,000, $60,000, you get a cash buyer to go with you on it for $85,000. The neighbor goes for $270,000. Say if it's fully renovated, $325,000. Then you got an opportunity to be able to make at least a $25,000 margin. What do? You use the blind HUD-1 statement to have the title company where the buyer comes in first, he cashes out the seller comes an hour later, he picks up his check, then the title company either wires you a check, send you a check in the mail, or have it where you can be able to come up and pick up your check. But if you're doing everything virtually, you need an LLC and have a business checking account and have that funds wired to your business checking account. And you use the proceeds from that to be able to develop a war chest, get you one of the lenders that do 90% LTV, 10% down payment. Mind you, look at the loan points. If it's 2%, 3%, then you can pretty much get a calculator and you can gauge how much is going to be the cost, the loan fees, interest rate, 6 to 8%. If you have a good hard money lender, mind you, a lot of hard money lenders, a lot of people that I came across, their lenders charging them 13, 14%. Jeez, that's an expensive ass loan. But we're going to look at more properties. So I'm going to go in range of Detroit, because Detroit has a lot of properties where if somebody has $10,000, they mess around, get them something. Right? Be 5, 6 bedrooms, but you also got to have a person that is like a good guard dog, mind you. A good guard dog can actually be able to make sure that nobody doesn't take this property and try to take the piping out of the building. So that's also another risk that you got to deal with when it comes to situations of investing out of state or not having a reliable property manager to be able to guard and make sure that everything is okay. So my screen is messing with me. So Detroit. Real estate. Okay. And with seller financing in Detroit, a $10,000 property, the only thing you probably have to do is just give them $2,000 and you win. Give them $2,000, $3,000, and you pretty much in there. Okay. Okay. So Detroit got a lot of properties on the market. Okay. Hold on. Let me do seller financing and see what pops up. Seller financing. Okay. Oh, messed up. Okay. Only 3. So there's only 3 properties that are seller financing where the seller has openly admitted foreclosed. I got one that's foreclosed. Let me see the foreclosed then. It's rough. Foreclosure. Ugh. Okay, Fannie Mae and Freddie Mac is chartered by the U.S. government. Okay, we know that. I'm trying to figure out what specifically is the details. This is just generic. 33,000. You see, Detroit houses be extremely dirt cheap, y'all. Yo, 20,000. Somebody that has 4,000 can literally get access to this. Now, you do need to have ability to control any type of scenario that may happen. That's why property manager, getting partnerships with a property manager, or getting at least acclimated with somebody in this area. That would be key. Okay, buyer agent to verify, no inside showings. Please review seller disclosure regarding infestation. Oh, they got infestation in this. This needs to be knocked down. You need to get this for you need to get this for like $5,000 to $10,000. That's infestation. Ooh, that's rough. But infestation is the reason of this property. Okay, buyer to remove and disregard all debris inside of the house. Contact realtor for any questions or offers. Yeah, so you got to chop this price down and also do a hard pull when I mean a hard pull, a title search to figure out what code violations this property got. Because if you got any violations, then that means that it's going to be $10,000 for the property plus any type of fees that comes along with this property. But somebody's going to get access to this property and somebody's going to knock it down. Literally, they're going to tear this down and hopefully make it into something that looks more, plausible than infestation. Jeez. Okay, great investment to add to portfolio. Property is tenant occupied. The measurements are approximately. Okay, I gotta go to this link right here. Okay, 34,000, 3-bedroom, 1 bath. Well, when it comes to this, I want to know how much can I charge per month before I knock the tenant out? I want to know, can I charge 600 per door, times that by 3, times that by 12, or, you know, because when it comes to that, that makes 21,000, and the property for sale is 34,000. So it's extremely high cash flow. I want to know, is the tenant, I want to know, has the tenant had a credit check? I want to know the actual status of the property in the neighborhood. Let me copy and paste this address so I can see the neighborhood. Do this so I can see the neighborhood. Okay. 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 So these houses all go for 34,000. Well, not all for 34,000, but range from 34 probably to 50. I would have to do some more research to see if we can find a $150,000 property and do it where if we just fix up the property up, modernize the inside, can we sell it for 150? Can we change the comps? Can we literally move the comps of the neighborhood where our price of fixing and flipping it would literally mold the whole entire neighborhood to go from 150, 120 at the lowest, but literally raise these property prices from 34,000, from the bottom of 34,000 at least to 150, you know. But I also got to see if there's any code violation, because properties that are being sold or being listed at this price has to be some type of code violation or some type of problem with it when it comes to it not being up to par when it comes to neighborhood standards. Okay. Okay. But like I showed you, if we can kick the tenant out and charge $600 per month, that's 1,800 times that by 12, that's 21,000. The property goes for 34,000. So that is a cash on cash return that's literally probably above or at 50%. You know, you put down 34 so you can get 21 back. That's a good deal to me. You know, for all the people that's tuning in, please like the video. Please ask any questions in the chat. If you have any questions or want to be able to call in, press this button and you'll be able to call in. But that's a high cash on cash return, because even if you chop the price down from 34 to 28, you can still get close to $22,000 back. Now even rise it up probably to 70%. Mind you, title search, look for any code violations, liens, any type of issues with the property. Find any realtors that know any property managers or realtors that are property managers. Be able to have that scenario where that can be managed. Usually it's set up 6% of the rents. I don't know if Airbnb would work where you can potentially try to get at least smack around 2,000, 3,000 per month to make the cash on cash return even more on your side with a chop down price, mind you. But in that area, 34 to 50, I need to do more research in that area to see if there's any property that's been sold within 6 months that has been sold for 150 or more, 120 to 150 mark, because that's very important when it comes to at least the opportunity to at least get some type of asset cash flow, and also be able to expand on it, be able to figure out, okay, if I can make this into $150,000 property asset, I can get a loan for 80, 90,000. Once the property has been stabilized, hence stabilized, when it's done with construction, done with repair, rent it out, get an appraiser, get aspects of a good loan officer, and see if you can be able to pull out some equity on that property and be able to move on to the next step. But I want to know, where are the vacant land lots that are zoned for apartment buildings? Because if that scenario has it where if you can build like a 12, 13 door type of apartment, where one of those properties that we was looking at Detroit, let me see if I can find it, where it was a 12 bedroom, 12 bath, and that thing cost like 170, 180. Like, yo, I'm like, people better take advantage of Detroit before foreign buyers come at it and they make it all expensive. Then everybody is gonna be mad again. Like, I don't know, because I would invest in Detroit if I was more in the East Coast, but my commitment is pretty much in Las Vegas and Houston when it comes to situations of how I would invest. But somebody that's in the East Coast that sees that everything is crumbling around them, they see that the property values in New York, the Bronx, 500,000 going up to 800,000. They see Philly, that properties that were going for 150 going to 920,000. Look the spread around to see how many apartment buildings you can obtain, because that's cash on cash return, where even if the equities isn't high in the 400s or 500s, you can get an apartment building for 250,000 in those areas. Mind you, if it isn't too crime ridden, if somebody that's in the armed security land, they can just dump their armed security in that block and literally have a low key, like a stop and frisk, and curb the crime. But that's why I missed the Detroit 300. That's why I missed Detroit 300. That situation could have curbed crime easily. But now all the rich people that live in, West Bloomingfield, they got the armed security all to them. I said, wow. But when it comes to aspects like that, if I had the ability, I would have armed security people right here, and also try to figure out if there's any back streets, because a lot of the crime been in the back streets. Our youth get shot and killed in the back streets. Even though armed security can't fully curb crime, but the presence needs to be there because they're fucking up property values. Fairmount Drive in Detroit, Michigan needs to be at $200,000 in value at all cost. At all cost. We need security in this block. We need security in that block. And if you're a big job provider, you can be able to get a tax abatement where you tell the Detroit mayor, where we are providing a lot of construction jobs. Say if you're a tech person or have any tech involvements, because I got a lot of diversified people on this channel. So there are people that are in tech and real estate. Create a tech center in the area, negotiate a tax abatement. With the tax abatement, you can be able to get your tax bill shrunk, or have it where you don't have to pay any type of property tax on that building. In the property tax savings, you need to put security in the area. You need to make sure that this is not going to be crime ridden. You got to make sure that the hooligans is not taking over the block. Like, period. Like, no. Like, if you invested $35,000 into a house, you have $100,000 construction loan just to find out that it was going to be filled with crime and destroy your equity where you're all in 130,000, but it's being suppressed to 30 to 15,000. Nah, that's why the Detroit 300 and anybody that has neighborhoods where it has armed security, where you can either hire black men, because Detroit 300 was all black men, mind you. So these guys knew the neighborhood, they knew the situation, and they just moved on. Where the dude out the head of the Detroit 300, he wound up being Rick Ross's security. He's yes. These areas right here, back streets, situations when it comes to any gutter area, it needs to be improved. It needs to be improved. It needs to be security posted up where any type of back street, you got a security, off-duty sheriff deputy literally posted up in there. But anybody that wants to revitalize Detroit, it would have to be in aspects of tech, construction, based off of building. And really the tech jobs need to be at 80,000 or higher. Then you can be able to see a change in Detroit. And also armed security. And if that doesn't help, call Fed and lobby for breaking up the projects where they can have it relocated, like they did Cabrini Green in Chicago, like they did any other situations in Oakland when it comes to their projects, like they did in Fillmore in San Francisco, aspects of a lot of central LA. They break up the projects so these people that are living in these houses can live in a house that has equity of $200,000 or higher, and that will fix the community. Armed security, you can be able to have it where the dudes that kept their nose clean in high school and as an early stage of an adult, they can get a good stable income. If it's really that treacherous, your head security guy needs to have his vehicle bulletproofed, or at least have bulletproof panels. That costs $40,000 in expense. Times that by 5, that's $200,000. But if you own a whole subdivision of properties like this in a row of 80 houses, mind you, the equities of 200, how much is 200,000 times 80? Let me do this. If you have 80 houses in a subdivision, if these properties can be risen at 200,000 based off of job ingenuity, increase when it comes to the population, that's how much in equity, in value of properties that you have in this subdivision. So that's why you can afford the armed security. You can get a loan against these properties to afford armed security posted up here, and deep inside there. So there's no shootings. You control the street. No, you control the street. Hence, you'll be actually more favorable where you might mess around. You can become the mayor of the city because you curb crime based off of being a developer, using the loans to be able to buy off-duty sheriff deputies from multiple states, New York, New Jersey, Pennsylvania, Chicago. And you figure out how can you be able to supply black men jobs or jobs for men in general, and have it where the ecosystem can be more safe, because I believe hard on crime. Yes, because it destroys the property values, mind you. People that live in Tuscaloosa, Alabama, a good YouTuber, Sub-Zero369, he talked about how they shot up his grandmother's house, and that property has been like literally $34,000 for the past 20 years straight, mind you. Mind you, those properties has been $20,000, $30,000 straight. Failed policies by that city's mayor. Now they say that politicians and the government can't create jobs, but they sure know how to kill them. When it came to NAFTA, they sure knew how to kill them. Keystone Pipeline, they sure knew how to kill them. So if they don't know how to create, if they somehow don't, they literally say, well, I don't know how to create a job. I don't know. And it is up to the private sector. But if the local government is going to say, well, we're going to have property taxes at 40, 50%, not property taxes, but business tax at 40, 50%, operating as a B2C type of direct to seller, direct to consumer traffic type of business, and they're going to tax them to death, it destroys industry. Like I want to have it where people in these areas can have it where my house used to cost $30,000 to $250,000. Like the people in Atlanta that remember when they could bought mansions for $60,000, and now those mansion houses are like 900,000, 1.2 million. Or how people in New York remember those brownstones, 60,000, 80,000, now 2 million, 3 million, you know. And those were aspects where the argument back then were, well, nobody ain't gonna buy those houses, ain't nobody gonna build up those houses. And they wound up building it, and they wound up taking it, and it wound up being missed opportunity for the original owners that used to own those properties in the 70s, 80s, and 90s to miss out on multi-million-dollar generational wealth. So when it comes to that, I believe building up these houses where, let me share my screen again. And for all the people that's coming in, please like the video. Please like, share, and subscribe. If you need access to me, my email is creditbuilder475@gmail.com. Like these properties right here, 40, 50,000 in valuation. These needs to be at least 150, 220. 150, 220. But these houses are all 34,000 that's in this area. People in this Detroit block literally have houses that's worth 5 to 10,000. Look at your pre-foreclosures, look at liens of these properties, skip trace them, figure out who is who. You need to figure out who is in this block. Is it Iranians? Is it Pakistanis? Is it Hispanics? Is it Black? Is it Jamaican? Is it African? Figure out who these people are. Have your flunkies to be able to put up "We Buy Houses" sign, like put a "We Buy Houses" sign in a highly trafficked area where a lot of cars is coming in. We buy houses. Skip trace them by using LexisNexis and get to work. Because if you don't gentrify them, somebody will. Somebody will. And the messed up part about it is they say politicians don't create the jobs, but a lot of the times they give foreign investors block grants and access to the situation of the land based off of the lobbying of the foreign investor, and also America trying to make ties when it comes to the situation of foreign nationals, buying up a lot of these properties, liquid cash, or have it where they have a tax abatement where they don't pay tax at all. They're just literally reinvesting their money into acquiring more businesses when they're supposed to be using that money to supply more direct jobs. So all of this is just opportunity what I smell here. Anybody that's in the East Coast area that is interested in Detroit, get you a good property manager, get you a good realtor, take advantage. Because I don't want to have it in 10 years, 12 years. They say, well, Detroit properties done blew up to $300,000, $400,000. I said, well, see, somebody that's a foreigner probably took advantage of it, right? And they say, yep. I said, somebody that owned that liquor store in Detroit must have bought that property. Somebody that been capturing all the payments of the liquor stores, the laundromats, the Chinese food that you go to every time, capture those payments to buy those properties, or capture those payments to buy the properties across the way. Once again, Black men, Black women, what are we doing for the youth? If you care about the youth, and if you don't care about the youth, what are you doing for yourself before they gentrify your block? Because all blocks is on the table, including a lot of people that said that are the main corporates of gentrification. A lot of white people getting gentrified, man. A lot of white people getting gentrified too by big hedge fund people. So I just want people to at least be more proactive. If you can find those leads like that, you have no problem. You can be able to at least be able to have it where property ownership that leads to more abilities for lobbying when it comes to your local politics. You can use the equity of your home to be able to put up money to a local politician's campaign. You want your name secured, right? Put up $5,000, $10,000 in the marketing of a campaign. $5,000, $10,000 when it comes to the situation of public donorship, mind you. But you need to have it where you can be able to influence your situation where if the whole great populace is in ruins, at least your name is protected. At least your name is protected and you're secure, where you can be able to have it where you can stockpile on assets, get access to loans, have the ability to get credit funding every 3 months, focus on more development plays, international plays. If you're a traveler, because I have a lot of dudes that say that they like to travel and they want to do business while traveling. Well, okay. Your loan officer matters everything. Business broker that does rip you off, everything. Having the abilities to be able to find somebody that is more connected with the local area and having some type of property manager, some type of hawk that can be able to see and figure out what is the issues, what is potential issues, any type of bottlenecks, if any, and be able to take advantage and capture. Because I don't complain in this channel. I don't complain in the channel because complaining to me is useless. Because when you're complaining, you're getting gentrified. If you believe in that aspect of they're hunting us, they're after us, they're gentrifying us. If you believe in that argument, you need to figure out how can I contact 5 owners that are interested in selling and align a buyer and be able to make money, $10,000, $15,000 in between if you don't have the money to acquire the property. Because Newark, New Jersey was $80,000, mind you. Now they're $275,000 median home price. Now, when Biden leaves office, it'll probably be $410,000. So that's just an opportunity for people to be able to look forward to. Scenarios when it comes to real estate, always opportunity. There's Black men and women that are involved in real estate. It's not all a pity party. It's not all victimization. It's a literally scenario where they're getting their assets. They want to teach some of the youth, but if the youth, and I'm going to bang on the youth one time, the youth actually are very entitled. A lot of them don't have the work ethic to be able to keep up. And a lot of the times that's where the scenarios of people not taking them serious winds up happening. Because I knew what my plan is. Because me going into my 30s, I will know that I was focused on helping people, making smart partnerships, and helping people get to the money. Because if you help people make money, they will love you. How do you get more fans and followers? How do you get more people that loves you? Making money. Have it on an aspect where you shake their hand and say, do you own your property of your house? No. How can we be able to get you access to the situation of the property? Become an equity partner. Get 20%, mind you. Get that LLC and get those shares in that company. Then figure out how can you be able to use the sweat equity to get him to a property based off of either if he needs credit repair, I'm the guy. If he needs trade lines, I'm the guy. If he needs a loan officer, Mark B. Anderson, he is the guy. He's literally going to be the person that's going to help you get funding every 3 months. He's going to be the person that's going to get you access to commercial real estate. He's going to be the negotiator when it comes to certain things that are too tough, too hard, or dealing with an agent that wants to be the gatekeeper. Structuring terms, finding out properties, finding out areas. There's going to be humans left. No situation in the world war at all. Mind you, oil and gas is going to be up, so get yourself some crude oil plays. But when it comes to everything being said, and I'm going to end this off here. I'm not going to do a huge, long live stream. Please focus on, if anything doesn't motivate you, please focus on profit on a downturn by having bear 3x ETFs, inverse ETFs, bonds if need be, commodity stocks. Focus on getting cash buyers that have liquid cash, get you access to hard money lenders, contractors, get you networking with property managers, realtors that are either property managers themselves or have a network, and audit the books. Audit the books of all that. From everything what I just said, audit the books so nobody doesn't fuck you on any type of situation possible. And you give them the wrath of God if they do steal. Meaning that we need private investigators on them. We need situations of knowing where their routes are. But if nothing happens, you have the aspect of Bill Gates and Michael Larson. When he gave Michael Larson $400 million, he put private investigators on him, off-duty sheriff's deputies on him, and literally had it where that you ain't going no world until you make sure that my money gets a profit. And Michael Larson wound up making Well, him $50 billion. So he made $400 million $400 million to $50 billion for Bill Gates. Then Bill Gates put him on to Warren Buffett. So when it comes to that scenario, you do that so nobody doesn't mess you around, and you got to do it just to be a bully. Like, you got to be a bully when it comes to this, because you have foreign investors that are going to buy a land lot, mind you, in 125th and Lenox in Harlem for $6.5 million, and that's something that's true. Bought a $5.6 million vacant lot, where the areas in that properties in the area only go for 1.2, and the land lots may be selling for 500,000. Mind you, they bought that for 6.7 million. That's a foreign investor. They didn't change the whole prices in that neighborhood by themselves. So when it comes to that, buy vacant land lots. People that are interested in land, you're not doing a bad thing. You're actually more on point. Because a lot of people are trying to do expensive fix and flips in neighborhoods where the margin doesn't make sense. The holding cost doesn't make sense. The property taxes doesn't make sense. Plus, you got to pay a whole bunch of expenditures when it comes to that scenario of a fix and flip in expensive neighborhood. Like a fix and flip in the Bronx. I didn't realize that from talking to the people that I'm connected with when it comes to New York real estate, that helps me, that holds me down when it comes to that situation. I didn't realize how expensive it is and how time consuming it is to sell New York real estate. When my man told me that it can take a year to sell a real estate property in New York, I was like, wow. Because in LA, a lot of the properties are being sold 4 to 5 months. You know, mind you, we got a lot of Chinese investors that like these big Baldwin Hills type properties. You know, originally black owned. You know, that's Ray Charles's old neighborhood. You know, his house is $5.5 million, and his family, I believe, his family still owns properties in that neighborhood. So that's still a win. So that's still a win based off of the equity. They can pull out refinance loan if they pay it back, mind you, they can pull out refinance loans safely every 2 or 3 years, pull out equity, buy more businesses, use the business income to pay back the loan, mind you, and servicing the debt. That's the reason why home ownership needs to be praised. When some dude, and I hate to say it, so when some dumbass motherfucker told me, why are people saying that they need to get a house? The American dream is dead. The American dream is unattainable. I said, well, even if you're a communist, socialist, you understand that home ownership is better than living in an apartment. So when he said that, I said, well, when it comes to that, gentrify his block, skip trace his area, skip trace his landlord, and gentrify his block and see how he feels about that. Then he's going to realize that, oh, maybe I should have got home ownership. Then that's when I realized that a lot of black men leadership needs to be recalled. A lot of black men need to get in and get rid of the black men that say stupid shit like that. Like literally. Because he literally said, and if I have to name drop, he's on Doggy Diamonds' YouTube channel. Kareem Johnson, I gotta bang on you on this one, brother. That was stupid, what you said of, I don't know why black people are trying to achieve home ownership if the market's gonna crash. So he pretty much put a pessimistic type phrase. Then literally, he's not an economic genius by no stretch of the means. I love Doggy Diamonds, but Kareem was dumb for that, because he literally just misled a whole bunch of black people on that channel to not own real estate and to not focus on investment properties of any sort because of the scare of a potential real estate market crash. The stock market is going to crash before the real estate market do, if you really want my honest opinion. That's why I've been telling you guys about bear ETFs, telling you about inverse plays and how to be able to make money. But I find that kind of sad how a lot of financial literacy stuff falls in deaf ears, and not enough men is not focused on dropping the rap microphone down. And if you're not a record label owner, or if you're not a producer, then you should focus on getting your CDL. You should focus on real estate. You should focus on some form of trade, credit repair, electrician, because we have more shortages of electricians, and that's a job that could potentially be there. Or if we're talking about jobs of the future, STEM. So when they automate everybody else that isn't Black, then you can be able to have it where you can actually have a company, not working for under somebody, but have a company, create your own system, create your own unions, lobby for your own politicians, hence that your name is ingratiated into a system where, you're not being targeted all the time. You don't have somebody that's giving your reparations to somebody else that's not even from here. But I digress. I'm Real Deal Financial. I talked all what I had to say for today. I want to make it nice and short and digestible for people that's listening to the replays. I'm Real Deal Financial. If anybody needs situations of a consultation, credit repair, real estate mentorship, creditbuilder475@gmail.com. creditbuilder475@gmail.com. So that's the aspects of business consultation. And if you need credit repair, even if you don't need credit repair, if you need somebody to tell them which credit union to go to, Real Deal. My email is creditbuilder475@gmail.com. Hell, I'll even give you two. DCU Credit Union, SECU. Key Bank, we talk about that all the time. That's the no doc business loans. Navy Federal, if you're a veteran, Navy Federal is actually one of the best. They're the best credit unions out there. But when it comes to that, I just want everybody to do better. I'm Real Deal Financial, and I'm out. Peace.